The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noontime till 1 p.m. Eastern. So there are a bunch of things that are going on that we need to look at. So it's the beginning of the week. Let's go step by step. The Dow had a very ugly red candle, but it held the 9-period exponential moving average on Friday. Made a new high in that gray leg B. That means it was above the 24,622 level. Then it reversed back down. It was all that news. Now we've got one thing less, perhaps, to worry about. Bombing's been done for now. So the market should actually, it's up 204. I would say that the Dow should actually be up 275 to 310 right now. And the S&P, which is up at 2676, up 19, should really be a little higher. So let me show you what we've got here is we've broken this downtrend resistance. We tried it on Thursday, couldn't make it. Tried it on Friday, did make it, and then closed way below. Today we started off on the line and we're above it. That's very good action. Look, the MACD is very strong in the daily. The stochastic is rallying. The on-balance volume is not quite there. There's a divergence. But most importantly, the action above the 9-period exponential moving average for the past 6 sessions, it's much more encouraging. But I've been saying to subscribers, until the Dow really starts to trade in the 24,700s, away from all this nonsense, above the gap high of the 22nd, which was 24,108, with the low the day before, 24,655, until it can fill that gap and really move substantially into that area to maybe tackle the high bar of 24,977, let's just say 25,000. We have to consider that this is just a rotational aspect, and every day something gets favored and something else doesn't. Now, what's really interesting is the weekly chart has seen a slight, just a very slight improvement in the stochastic and the unbalanced volume. Very little in the unbalanced volume, but it's always very slow to turn around. Monthly chart still looks very good. Here we go. So the parameters to watch are support now is at the 24,200 area to 24,120. A close below, getting closer to 24,000 would be pretty negative action. A push over the next 2 days, I said to subscribers, going in the Dow going to the 24,700s by Tuesday would be very good and at least portend slightly higher prices for the rest of the week. The S&P at this particular point up 20 at 2676.44 has made a leg B. This is going to be a peak B if there's no new high today, but I suspect that they're going to somehow try to get to the 2680.27 level to start leg C. The MACD and stochastic have really rallied so strongly. I don't see the comparable appreciation in the price. And as such, I'm saying there's a divergence here between the technicals that were strong and the price that's been very reluctant so far. The weekly chart is a little better than the Dow because it did not break the left side low of February the 9th on that last pullback 3 weeks ago, and is holding quite nicely. In the monthly chart is still quite good. QQQ is the Index 100 trading at 162.46, up 1. Has a much weaker chart formation, but it is steadily trying to move higher. We do remain short from less than 1 point from the all-time high, and within an hour of the all-time high. I'm not sure we're going to be able to get to the 175s in this particular move. I think quite a bit more testing to the downside has to be done, and then later on we should start moving higher. But that's the way it is. The weekly chart is actually not great. Hasn't been able to close above the 9-period moving average of 162.42 where it is right now. But this is just the beginning of the week. And the monthly chart is still pretty good. Go to the IWM. Spend a little time. Actually, this weekend, I spent much more time thinking about the market, going through different aspects, going through some studies that I like to do on weekends, and not going crazy sending out dozens and dozens of charts to subscribers. My Monday charts I like to start sending out Saturday and Sunday. But I did send out the most important charts, and that was very important. And this shows for the IWM right now that the price action has been better than the technicals. Interesting how that's happened. So the way the IWM is acting at 155.05 up $1.10, it really needs to get to the 156.20s into the 156s by Wednesday. Let's see what happens there. Very strong support in the 154 to 153 area. Hey, let's go to gold. Spend a little time on gold this weekend. I have to tell you something. I think that we're starting to see a much greater technical improvement in both the weekly and the monthly charts. We haven't had that price movement yet. So as I'm looking it up to at 1350, intraday, the candle on Friday was very ugly, but it hit the 50-period moving average and then ran up, closed above the 9-period moving average, got into the Chapman wave inside track down channel, hasn't been able to break above it, but it's in there. If gold starts to trade at 1358, and it's at 1350 right now, it shouldn't be a big deal. If it is to get to 1358, I suspect we're going to see a leg D in the daily chart above 1369, and that's going to really help the weekly chart. Gold breaks down if at any point it starts to trade under 1327 this week. That's the way I'm looking at it. But so far, actually, this is quite good action. Silver also not bad. Big reversal candle, green candle on Friday. Big reversal today, coming back to positive up 0.05 at 16.71. When I'm looking at the cup formation in the weekly chart, you'll see that the MACD has turned up, stochastic has turned up. I'm not seeing the histogram. It is positive, but I want to see at least 2 or 3 candles with the histogram positive to say, hey, I think silver is back in play. And right now, this is a good candle. And the technicals are improving. They're not great. They are improving. Let's go to high-grade copper. High-grade copper, as I looked at it over the weekend, this 200-period exponential moving average of 3.05 is really an important support. Keeps coming back down there and then bouncing up today at 3.10. I just think that copper is stuck in a range, and that range should be between $3.14 and $3 for the next 2-3 weeks. Let's see how the next few days are concerned. What happens? Crude oil. Crude oil had a spectacular move. It's gone to an F/B in the daily chart. This is one of those double hump patterns that we look at in the stochastic and MACD. All I'm saying is that at 66.45 down at 0.94, if there is a new high above 68.50, that's going to be very positive, pushing away from the weekly 200-period exponential moving average of 67.40, and right now it's at 66.46. So that magnet is still there, and support is at between 65.5 and 65. I'll come back and we'll talk about the TLT, what's going on in bonds, what's going on in years, why is JNK rallying so sharply? That's the junk bonds. I'll be right back. Basil Chapman, Tactic Technicians Hour, cost of 250.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back. Whoops, let me just get that a little softer out there. I forgot that it was on. There you go. Okay. Sometimes I like to see if my charts are showing up okay on Tiger TV. So this is very important. You see the GDX went to a peak D underneath the last peak D and peak B that was at 23.15 on the 14th of February and way under the 24.86 high of 25th of January. So to me that says the gold stocks are acting okay, but they're not leading, they're not showing tremendous strength at this particular time. Just going to be watching it closely, and I'll tell you why I'm mentioning gold right now. In my overview, political, socio-economic overview, my inclination now is to start to think that the international worries are starting to set in. There's a certain tiredness of tension. How do I explain that? It's something in my mind. I've got a picture clear. Yes, I think many of the foreign countries are beginning to appreciate that the United States has a president who does act, and it does seem as if he acts with forethought in some areas, or there is a preconception and then he acts on that, but going to that position, he uses the technique that's been his modus operandi in business pretty much all his life from what I've read, and that is to have obfuscation, not to back of his mind he has some ideas, but until he puts the picture together, he could say anything or do anything because it's part of the modus operandi. I'm not even sure it's part of the strategy, it's just part of his technique. And I think that world leaders are starting to say, well, okay, we had some decision made over the weekend on Friday night. Yes, we can either concur or not, but at least it was clarification. It was done in a very precise way. And I think there's now kind of the reason why I'm mentioning this is because I think I'm seeing it in the market. For instance, gold going into Friday before the event, gold should really have been, this is just my opinion, of course, just based on my experiences, gold should had a big spike to the 1370 level. and then pulled back. So that was today's Monday, so Friday, Thursday, Wednesday. That was Wednesday. Thursday had a very sharp pullback. That pullback should have been very minor. We should have gone from the 1369.4 level on the 11th, pull back maybe to the 1362, 1359 area, and then pre-Friday's Friday evening, intraday, there should have been a leg D. And then there would have been a sharp pullback from Friday night, Sunday night into this morning, and gold would be trading maybe right here, 1349, but having come off a higher level. That would have said a bunch of things. That would have said, hey, the weekly chart of gold is starting to improve quite a bit. The MACD actually would have crossed positive. The stochastic would have crossed positive, and they would have had a higher level. So this is saying to me, this is part of that whole indecision that even gold wasn't 100% sure which way to go. And it's still at this very moment up $2, is not really sure what's going on. So my suspicion is that the currencies and gold are trapped in a range right now. The evidence is suggesting, to my eye, that if they're in the next, let's give it more than 1 week, if Tuesday, a week from tomorrow, at the close, gold has not broken 1343. No, I have to give it a little rub. 1340. Silver hasn't taken out, it's at 1670 right now, hasn't taken out 1653 support. If, in fact, crude, I'm adding crude oil here, if crude oil hasn't slipped under 65, it's at 66.47. Nope. If it hasn't slipped under 64.70, but in fact is holding here, then I think what we're looking at is the chance for, then there's a chance that the market is telling us that there is a possibility that gold is being bought because of a certain uncertainty, a world uncertainty. That's kind of just the way I'm looking at it right now. We have no position in gold at this particular time, but I just want to mention, and not only that, it's the same thing with crude oil. The crude oil, if there is something that goes on, I don't know why there should be, because Friday night was quite important, but if there is, then instead of seeing all these commodities start to pull back towards their lowest support levels that I just discussed, that hold here will actually go a little higher. Crude oil would be part of maybe a Russian situation. So that's all right. I just wanted to mention that. Those little parameters, just make it easy. Question is, please explain why it is necessary that a market should do this or that. The market does what it does. Wow. That is why we do technical analysis, because the market does what it does. And from the evidence that we are looking at, we try to decipher what's going on. Let me explain why I'm looking at this. Crude oil stochastic is at 89%. The MACD is still very strong, but it is making an M formation. The price is now with a red candle, but it's holding well above the 9-period moving average. Gold, the reason why I am looking, I would just say a tad more favorably to gold, is because gold has had this cluster formation, and it is still holding pretty darn well. It should have been much lower right now. Just as I said, my impression of action of gold historically is that the pullback on Wednesday was kind of surmising that maybe it was not going to be as bad as everyone thought, the bombing that is, and that was anticipation. But in fact, the normal thing would have been Thursday, maybe it holds after Wednesday's big spike. Friday should have seen a big push to the upside based on not knowing what was going to be done, and it wasn't. So what I'm saying is the market doesn't have to address my concerns. I'm looking at the market and saying, hey, you kind of ignored the concerns on Thursday and Friday, and even today based on gold. But why are you still holding so strongly, being up to, I would expect that you'd be down 5 or 6. It was down 5 or 6 earlier, but now it's down, it's up 2. So all I'm saying is that just like the volatility index, that takes me to the volatility index. Look, The volatility index was pulling back from Wednesday. Thursday was a lousy candle. Friday, for the first time, we saw the weekly chart close underneath the 9-period exponential moving average, still way above the 14.54 200-period exponential moving average in the weekly. But that was the first time in a while that we closed under the 9-period moving average, maybe the first time in 5 weeks. So that's saying to me right now that there is selling pressure in the volatility index as the technicals deteriorate, and some buying pressure. And one of the reasons for subscribers, we've added no short positions. In fact, we've added long positions. Gosh, we just missed one this morning that just had a 6% gain, and we missed the darn thing. It was there on the list, buy at such a price, we missed the price. What can I say? But the bias is to the upside, and we've got long positions. I'll be right back. Dow's up 211.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let me say that the 2676.50 up 19.50, the E-mini made a 2-minute peak deep top of the 2679s. It's got a very important support right here at 2675.50 to hold. The 5-minute chart made a peak E, but the technicals are still actually quite good. The technicals of the 2-minute chart were deteriorating. Still good in the 5-minute chart, and the let's see, the 10-minute chart is still pretty darn good. It does seem to want to go to a leg D. I've got an F/C here, and that would be above 26.79.25. All right, let's get back to our nitty-gritties here. It was mentioned the IYT. Yep. IYT's transportation, really big candle today. Leg B, another gray leg B. And the weekly chart is not so great. The monthly chart is good. So it's going to be what happens follow through into Wednesday. If at 190.59, up 4.14, let's see, that means that the airlines must have rallied. Surely XAL looked lousy the other day. Yeah, it's up 1, no big deal, 114.95. CSX, I always like to go to CSX. CSX is, only up 69. So I'm not sure what's making the IYT act so well. But on the intraday basis, up 2.22%, very good. And leg B, great leg B, and it's going for the gap. That horrible gap down on the 20. Remember, we were looking at these gaps from the 22nd of the different charts on the 22nd of March. 190.800 was the high. 186.10 is the low. Ooh, big move. And now it's had an equal move to the upside. So we'll watch what happens here. But this is much more encouraging. And so as I was saying before, one of the things JBHT, correct. I saw that go by. JBHT is JB Hunt, right? Yes. Whoa, big move, up 740 at 120.17. I'm not sure if that's earnings. I'm not going to do the notation right now than to say right here, you have trendline resistance right there. And it's broken above it, but hasn't closed above it. So JB Hunt has to close above 120. Yeah, but let's say above 121, that'll be really good action. It's got a couple of days to do it. If it doesn't do it in 2 days, not good. If it pulls back and it goes halfway into the wick, below 117.5, the next 2 days, good chance it gives back a chunk of the gain for today. Must be news related, whatever it is, it's acting very well. So at the upper end of the range. Next question I had was, when I look at Boeing, yep, Boeing's up. That's why the market's up $1.68. You know, I'm having a tough time with Boeing for 3 reasons. Number one, it has been an absolute leader in the PPA. That's the Aerospace and Defense ETF. Number two, it is the most international, one of the biggest international companies we can talk about. And it's everywhere, and it's got aircraft that are in tremendously high regard and demand. Now, we've not seen this for a very long time, but there have been periods over the years, decades, where markets have turned down, and as they've turned down, you've seen orders throughout the world just dwindle. 34 orders turn into 20 orders. 20 orders get 15 delayed for a year, and 5 that are about to be canceled. And then that's the way it whittles down. And then when the economy turns around again, they add those back slowly. So let's see. Peter in the Den says, congrats to Des Linden, first USA woman to win Boston Marathon in 33 years. Peter, you're lucky you're not here, or your wife's not here to run. It is just the most, I'm looking out the window, there's raindrops on my window at a slant at about, not a 45 degree slant, but a slant. This window hardly ever gets rain. And it is 30-something degrees. It is freezing. The wind is blowing right in your face. It's blowing from the east to the west, which is the way they run. They're running from west to east. So, I mean, it's against against the path that they follow down Commonwealth Avenue. I was hoping this year, I haven't been for ages, it's just like it's like 3/4 of a mile away. I used to be able to just drive down and park and watch and then come back to my work. Now they've got barriers everywhere, except today probably would have been a good day to go because I can't believe how few people are out there. There used to be cars all the way up the street here. So it is a miserable day for anybody to finish, let alone win, but to just even finish, absolute admiration. I was always a sprinter. I still sprint. I mean, I still like to sprint rather than to, I could never do long distances. 220, 100 and 220, and the 100 yards, 100 meters, 200 meters, and hurdles. That's what I did, and I was the last runner in relay, and I could never do anything more than 220. When I did the 441 once, I remember my friend and I, everyone had finished, and we were just kind of still staggering along. So I have absolute admiration for people who can do these long distances. But today is brutal, absolutely brutal. So cold, freezing, rain. In fact, there was a little bit of sleet earlier on. Wow, amazing. I was expecting that there would be some slippage on some of the corners, but in fact, I guess there hasn't been, which is great. So yeah, next year in Boston, as they say. What we're looking at is Boeing up $1.39. I think Boeing's in for a rest. Now it's different. You see, when you get to Raytheon, part of the military, I can understand. Oh, look at that new all-time high. So much for my saying that I think that they are going to have a bit of a rest. No way. A, B, C, D. Leg D in Raytheon, all-time high at 224.78. Fortunately, I just stepped aside with these guys saying, hey, I just don't know what's going to happen here. The technicals were still good in the weekly charts, but not and the monthly, but not the dailies. And they did pull back. Raytheon went from the 223s to the 205s. It's now 224. Fantastic move. GD, which is General Dynamics trading, not as good as Raytheon. Yeah, they're in a different area of defense. Defense should have an S. Let me see. Just doesn't look right. That should be an S. There we go. Okay. So within the context of cyber stocks are making new highs. Yeah, I know. I wanted to get one, and we missed out on that. I'm sorry. Okay. Let's go to the question I had was. Okay. I had a question about bonds. Now, let me do this. So where did I put that? TLT trading right now down just 5 cents. It was down deeper earlier on. When you look at let me go to my T-bond and I'll show you something very interesting. While I'm going to the T-bonds, let me just say that JNK, the Junk Bond Trust, has had a really big move. And within the context of the yields, what I think I'm looking at here is that so far there's been a high-level consolidation. If that consolidation lasts about another week, let me show you this right here. Look. Yeah, I don't want to rush it. I won't rush it. We'll come back so far. Because of 198, it's nice enough.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So there's a pattern that I talk about very often, which is the LMT. This is Lockheed Martin mentioned the Den. Lockheed should get a lot of orders, new stealth cruise, a perfect record, and against Russian AWACS plane. So there's a thing that I developed over the years called the instant restart. Then there's something called the unconventional instant restart. And then what we're looking at here is the pattern of the unconventional restart. And it's really tricky to identify, but once it becomes clear, it tells you something that is, in my work, very substantial. What it says is, if you've identified the instant restart, but that leg A, which becomes peak A, pulls back underneath the low that was made at that peak A, be aware that there could be a continuation of the rally. And when that rally is completed, and this is the craziest thing, it says it should go to a D and sometimes even goes to an E. But when it is done, not only does it come back strongly, it should go right to or under the previous low. And that low is very often made in the interim period. Oh boy, a lot of words here. I don't know how I can show it visually. So here we have a Chapman Wave instant restart on the 10th of January. It pulls back, has an inside bar, makes the peak D, leg D, peak D, runs to a new high for 2 days, nice strong move, then gives it all back, and then it's chop, chop, chop to the side, so it's E/A, but the MACD is still holding well. And then all of a sudden, the MACD pulls back, crosses negative, stochastic crosses negative. The price goes under for 2 days, the 9-period exponential moving average. You could have had every reason to put in a down arrow, but as you're about to put the down arrow in, the very next day, whoosh, it starts to move to the upside. You think, oh, maybe this is a brand new buy mode. So it goes F/B, continuing in the previous sequence, G/C. At G, it pulls back really strongly, and it takes out just exactly the plan that I said you look for, the low that was made at 327.42 on the 24th of January, Lockheed Martin, LMT, that's what we're looking at. It goes to 326.11, has a fantastic green bar, follows it up sharply, and runs to a new double top high at what? At exactly a round number right there, 363, opens at round number 361, goes to round number 363.00 all-time high, has a consolidation for a day, can't take it out, goes to 362.98, 2 cents off the all-time high, with the third round number of 357 and kaboom, look at that. It goes all the way down to 325.79 on the 22nd. So that's a 30-point decline, a 10% decline. And now chop, chop, chop to the upside is kind of reversing this in a U-shaped pattern, which I think is going to fail. And it's going to be retesting the 341 to 337 area by next week, I think. That's the way I'm looking at it. So I'm going to make a note of it. Let me take a moment to write it down because I had at least 3 fantastic charts that I was going to work on from last weekend. I said, oh, I remember what it is. I have no clue what it is, even though I spent hours on the darn charts. So LMT, Chapman wave, instant restarts called restart. Unconventional flat base restart. Daily. Oh, that's all you see. It's a lot of words, but visually look what happens. All you have to remember is you have an instant restart, that fails, but then it suddenly soars to the upside, continues the pattern, breaks down, and then takes out that left side low that was made after the peak A. All right, so enough with that. Let's get to our nitty-gritties. And the nitty-gritty says that within the context of the yields, this is still a high-level consolidation. My thinking here is that yields could still go chop, chop, chop to the side. They could even make slightly lower lows. And that at some point soon, we should see some kind of a rally in the yields. I'm waiting for that leg D in the weekly. It could take a while. It could take a long while. You never know. But it should get to 32.22 to start leg D in the weekly chart of the 30-year white one, the TYX. Brown is TNX. Cyan is 5-year FVX. So, and that's having a high-level consolidation, just like the TNX. So we're going to be watching this really closely. I think this is part of the vernacular, part of what we need to be watching. So now let's go back to our LMT symmetrical, head and shoulders, inverse on daily. Let me go back. Yes, over here. And it's almost in the same time frame, yes. So I think, look, there's a peak A, peak B, leg C. I think it's going to stop under that high of the candle of the 1st of March, which has a high of 353.58. I don't know if it's even going to get there. We'll see. Okay. Another question I had, where was that question? I saw a question. Hack new highs. Yes, Hack is doing very well. I mentioned that to subscribers, doing very, very nicely. Here's that leg D that was missing. And in a look, let's just take a moment here. Yeah, man, why didn't I trade this? Because this is what we were talking about. Hack, which is the ETF MG Prime Cybersecurity ETF, making a new all-time high, made a high in the daily at peak C at 36.39 on the 13th, pulls back in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 bars down. That's your plumb line. Makes a cup formation. The 200-period moving average was moving up sharply. Stochastic made a low and came back above 20%. MACD crossed positive, and now it's gone to A. This is gray D/B. I'm just treating it as a D right now. And what does it do in 12 bars? It goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Today's the 12th bar. And what have you got? You got a Chapman wave, left side, right side price time match. Right side. And there's the dashed line that I used for a Chapman wave inside wedge target repellent line. Had everything done, and then didn't place the buy signal. How silly is that? Leg D right now, but the weekly chart is really very strong. Brand new leg B, G/B, and the monthly chart is still in leg E. Wow, this is a tremendous ETF. Very, very strong, one of the strongest. Okay, now what I wanted to do is this. So support would be at 35.58. The 9-period exponential moving average in the daily. Next question I had, so bonds trading band. Now, I had a question. It's a good question, but it's a question I've answered many times. Someone said, when the market drops sharply, does money go from the stock market into bonds? Is that a traditional thing? And my answer has been, it used to be not traditional, but it was something that happened often enough. It's something that you could use to make money. number one. Number two is we've had a whole different dynamic completely for the last 6 months or so, because yields have been going to highs, regardless of what the market's been doing. So there's been a change. But my contention is that if there's really a very sharp pullback in the market, probably we will see some money start to flow into bonds. Whether or not it's going to change the direction of yields, if it's enough to do that, that's just more security than anything else. But I don't know if it means that bonds are going to skyrocket and yields fall. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve Rhodes comes up. Should be a great show as always. And of course, same thing with Dave White. And you've got the 3 o'clock hour with Tom O'Brien. Dow's up 294 now. Sudden burst of energy. What I said to subscribers this morning is that if there is a rally and then there's no real sharp give back of that rally by the midday session, then buyers will come in, especially if the volatility index pulls back. One of the reasons why we want to remain along. Now, we don't actually have a Dow position in this instance. We have others still holding the semiconductor along. What I'm looking at here is that this is now a Chapman Wave 3, leg B in the daily, Chapman Wave 3 in the Chapman Wave 5 formula. And look, the daily chart has got the stochastic finally pushing up, and the MACD deflected back up again and is now testing the 200-period moving average in the daily. This is a very important moment. One of the things that I'm looking at is if the Dow gets into the 26,700s, could be today, but if it gets there, all of a sudden you've got this whole area as major support it'll take really bad news to break that down. I suspect that we're going to get something at some point in the next couple of weeks where there's a real test of the most recent support between 24,000 in the Dow and 23,800. But until then, the bias for me is that there are enough individual stocks that are looking quite good and want to go higher, and that's really what we're doing for subscribers. Now, here's another thing. Looking at the general market, if I'm looking at the, oops, I didn't mean to go there. I wanted to go to here. If I'm going to the VIX index, the fact that since Wednesday, the VIX has been pulling back from the 21 level, 22.21 level, to be trading now at 16.71, with the technicals deteriorating, is saying, now, well, the question I had was, Dow level, what, Basil, please share your thoughts on what level would change your stance in the Dow, making it low already. Let me do that tomorrow because I want to talk about the internal low, the residual low, and what's going to make it really important for that low of 23,360. In the meantime, we have to finish the upside bias. That's really what I'm saying right now. So have a great day. I'll be back tomorrow. Check out my opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.